Hey everyone, Leigh Goldstein here for 10-Minute Trades. Welcome to our Members Trade of the Week, where we highlight one of our members' best trades of the week. Or we try to highlight something interesting and educational as well. Now, one of our traders, Larry R. from Canada, he's been on a hot streak. He's really been trading well for the past couple of months, and he always is kind enough to send in his trades. So let me show you what happened to Larry on the US CPI report this week. Now, this is very interesting because remember, if you saw the video, my trade of the week, we were talking about CPI and how the brokers were raising margins on this trade. So Larry was trading gold on the left side of his chart and bonds on the right side. And his trade actually got shut down, and it happened really fast. And you don't even see that he had a quick profit of gold on the left side of his chart for quite a lot of money. It looks to me like it's $500. And then on the right side of his chart, he was trading bonds, and for whatever reason, the broker allowed the bond trade to continue trading. They didn't shut down that trade, and when Larry was done, he had a grand total of $686.25 of profit trading gold and bonds. It is a little bit confusing because it happens so fast, but what it appears to have happened, as far as I can see, on the left side of the chart, he was trading gold and he had an almost instant $530 in profit. And then he was also trading bonds, and the bond trade took a little bit longer. Eventually it hits one of his targets, two of his targets, and he's finally out of both trades for a profit of $686.25. So what does it mean when there's a margin event? It means that the broker expects that a certain trade might be very, very volatile, and they want to keep the trade as safe as possible for traders, so they limit the amount of contracts you can trade. And it means you have to have extra money in your account to cover the margin. Larry apparently did not have quite as much money as he needed in his account, and that's why the broker actually stopped his gold trade, but they left the bond trade going. So he was very lucky and had a very nice profit on the US CPI, and I'm going to call that the members trade of the week. But the lesson really is this: if the broker does limit margin, it is better to trade less contracts, because what would have happened is, had Larry's gold trade been a negative, a loss, it still would have been shut down, and it wouldn't have had an opportunity to go into profit. So it would have been possible to lose money even on a trade that would work out and be profitable if it's a high margin event. So it is something you just have to be careful about and trade carefully. Larry had a little bit of luck. I think he believed he had enough money in his account to cover the margin, and apparently it wasn't the case, but it worked out well as he had over $600 in profit. So thanks, Larry, for sending the video. The members trade of the week is US CPI, and I'll see everybody in the trade room next week. Leigh Goldstein signing out for 10-Minute Trades.